This example kind of takes together the four adjustments for reflecting the true value of assets at the year end. So that is my stock adjustments, my debtors control adjustments, my fixed asset adjustments, and finally my provision for bad debts adjustments, which is also part of my debtors control. So your stock, your fixed assets, and your debtors basically. Now we're given a pre-adjustment trial balance at the year end of 30 June. So all of the figures again is representative of the balances and totals on 30 June, except if otherwise indicated as for accumulated depreciation. So the way we're going to approach this is to tackle the additional information one by one. You'll see here there are some questions at the start, and then we've got a table that we need to complete. We've got our current picture, the true picture, and the adjustments and the accounts rather that we need to use to record the adjustments at the year end. Right, so let's first of all start with transaction number 1, or additional information number 1. The stock count on 30 June reflected that the following was still on hand: 54,500. Now my trading stock in the pre-adjustment trial balance is 55,000. So my current picture for additional information number 1 is 55,000 Rand in the asset account, nothing in the expense account. And you will see that the question says if the answer is 0, simply leave the space provided blank. So we're just going to leave the expense blank for the current picture for transaction number 1, because the full 55,000 Rand is recorded in trading stock. Alright, and then our true picture for trading stock is in actual fact 54,500, because that is what our stock count showed. So 54,500 is the true picture for trading stock. And again, my expense is still my expense is now going to change because I have reduced the value of my asset by 500 Rand, and the way that I've done that is I've taken 500 Rand out of the asset and I've moved it to my expense, which is called the trading stock deficit. Okay, so my asset decreased. So if an asset decreases, we need to credit the account below, and my asset that decreased here is called trading stock. So we're going to credit the trading stock account for this adjustment. And for my expense side of this thing, we are going to, because the expense is increasing, because we are losing, using, consuming, giving up, if any of these things are happening, then we need to record an expense. And in this case, we've got less assets, so we've actually lost some of our asset, so our expense increased. So if an expense increases, we need to pass a debit. Good. Then which account do we need to debit? So regarding this transaction, it's going to be the trading stock deficit account. So I hope you get the picture of how we're going to complete the rest of this question. Let's now go forward and let's first complete this top section. Only in rare circumstances will upward adjustments be made to assets. You can read that by yourself. And remember that for fixed assets, vehicles, buildings, computer equipment, property, plant and equipment in the financial statements, the assets value is represented by two accounts. All right, that's important. We've got a positive account and a negative account. The positive account, an example of the positive account here would be the vehicles. An example of the negative account, accumulated depreciation, would be accumulated depreciation, and we always have to specify specifically which category. So accumulated depreciation, vehicles. So these two accounts together is going to give me the value of the asset. Alright, so we said that a couple of times. Then the same thing or similar thing is true for trade debtors, which will eventually end up in trade and other receivables in my financial statements. trade debtors, the value of trade debtors is represented by two accounts as well. The positive account for trade debtors is going to be debtors control, and the negative account, also in the balance sheet section, is going to be the provision for bad debts account, not the provision for bad debts adjustment account. That is a nominal account. It's going to be the provision for bad debts account, and that is a negative asset as well. So again, here we're going to take the balance on the positive debtors control. We're going to subtract the balance, which will be on the credit side, of the negative provision for bad debts account, and together that will give us the value of debtors control. So let's see how this works. The account for Mr. R. Carnegie, 1,980, has to be written off. So the current picture before this adjustment is, we've got a debtors book of, well, let's have a look in my pre-adjustment trial balance. It is 33,000 Rand. So my debtors book before this adjustment is 33,000 Rand. That's the current picture. My provision for bad debts account in the trial balance is 660. So there's my positive account, there's my negative account. Good, so we fill this in, 660. And 1 and 2 combined gives me the value of my trade debtors. So my trade debtors is going to be 33,000 minus the 660, and that is going to be 32,340. That's the current picture before any adjustments. We don't have any expense at this point for trade debtors, so we can leave that blank. Now we've got our adjustment of 1,980 that we need to write off. So what that means is we're basically losing again some of this asset's value. So that needs to go from the asset to the expense. So my current picture is going to change to the true picture, and my asset's value is going to decrease by the 1980. So my expense is going to increase by 1980. My debtors book is going to decrease by 1980. So I'm going to say 33,000 minus 1980. That's going to be 31020. My provision for bad debts is going to stay exactly the same, and my new value for the asset is going to be the 1,980 less. Okay, so it's going to be the original 32340 minus 1980, which is 31360, and we can double check that. We can take our debtors book minus our provision for bad debts, 31020 minus 660. There we go. Ooh, 31020. Let's have a look. I did the first one wrong. This one was 32340 minus 1980. So I just need to redo that one. 32340 minus, that's the original figure, minus the 1980, minus 1980. That gives me the same answer, 3360. Good. Now, to record the adjustment, our asset had to be decreased. So which account is going to be decreased here? Which account are we going to credit? It's going to be the debtors control account. All right. And my expense had to be increased. And because we knew for sure that this debt was bad, we're going to use the bad debts account, because the information said the amount has to be written off. All right. Then we go to transaction number 3. Depreciation must still be provided for. Vehicles need to be depreciated at 20% on the carrying amount. So 20% of the carrying amount, we take the cost of my vehicles, which is 298,000 Rand, cost minus the accumulated depreciation on the vehicles, and we're going to multiply all this by 20% and multiply it by the months that this asset was in use divided by 12. So the cost of this asset was 298,000 Rand. The accumulated depreciation relating to this asset was 119,000 Rand and 200 Rand, sorry, 119, 200. Multiply all this by 0,2. We're going to multiply by 12 over 12 because there was no information telling us that we had this asset for less than 12 months. So we can calculate that. And that is going to be 298,000 Rand minus my 119,200. And that is going to give me the carrying amount of 178. I'm going to multiply this by 0.2, which is going to give me 35,000 Rand. And if I multiply by 12 divided by 12, that's exactly 1. And my final answer is 35,760. Okay, so this is the depreciation amount and the amount of the asset that was used during the year. So the asset needs to be decreased by this amount, and my expense needs to be increased by this amount. Right, so let's do that. The current picture, we need to complete the cost and accumulated depreciation. So the cost we know is 298,000 Rand. 298,000 Rand. And the accumulated depreciation, we've already checked that as well. 119,200, also from the trial balance. There it is. And if you take the cost minus the accumulated depreciation, that gave us the carrying amount. We calculated that previously. 178,800. Alright, that's the 298 minus the 119. Okay, that's the value of the asset before we've made any adjustments. You can see it's these two accounts combined. The one positive account minus the negative account. Then during the year we've used this asset, so the asset's value needs to decrease by the 35 and the expense needs to increase by the 35. So before the adjustment there's no expense. After the adjustment we've got an expense of 35,760 and my value of my asset is going to be 35,000 Rand less. Now which account are we going to use to record the decrease in the asset's value? It's going to be not the cost account but the accumulated depreciation account. So my cost is going to stay the same at 298,000 Rand, but my negative account is going to increase. So my negative account is going to go from 119,200 plus the 35,760, and that is going to give me my new accumulated depreciation figure of 154,960. So if I then take my cost account minus my accumulated depreciation, that is 298,000 minus 154. Sorry, 298,000 minus the 154,960. My new value of the asset, which is 35,000 Rand less because of the usage, is 143,040. Now, which account did I use to decrease the asset? Which account was credited? It was my accumulated depreciation account. Which expense did I use to account for the usage of the asset? It was the depreciation account. Right, so we're almost done. One more transaction. So my last bit of additional information: provision for bad debts is estimated at 10% of the total debtors book. Okay, so what is my debtors book before this adjustment? Remember, before this adjustment we've already had an adjustment to the debtors book of 1980, which was the bad debts. So that decreased my debtors book from the 33,000 Rand in the trial balance to the 31,020 after the adjustment. So I'm going to start off with a debtors book of 31,020. That's very important that you remember that we've already subtracted the amount of the debt, the amount of the debt of 1980 that we're not going to recover. Okay, so my debtors book is 31,020. My provision for bad debts account before the adjustment is 660. There we go, 660. The positive account minus the negative account is going to be 31,020 minus 660, and that is 3360. That's before the adjustment. And we've also got an expense here of 1980, which represents the previous debt that was written off for Mr. Carnegie. All right. Now, the true picture after the adjustment is as follows. My provision for bad debts account needs to be adjusted to 10% of the total debtors book. So my provision for bad debts is going to be, let's quickly go to my calculation, 0,1 times the debtors book, which in this example is now going to be the 31,020 times 31,020, and that is going to be 3102, and that is what my provision for bad debts balance should be. So I'm just going to abbreviate this, provision for bad debts, and this is going to be a credit balance, because the provision for bad debts account, you'll remember, is a negative asset. Alright, so my information said that I need to adjust provision for bad debts to 10% of the total debtors book. So this is what the balance should be, 3102. The balance is, however, currently, it is, if we have a look here, it is 660. Alright, so the current balance is 660. Also a credit to the provision for bad debts account. Oopsie. Alright, so this is what the balance should be. This is what the balance is currently. So the difference is going to be my adjustment. The adjustment is then going to be the difference between the 3102 minus the 660, and that is, to our calculator here, 3102 minus 660, 2442. Okay, 2442, and that needs to be credited to the provision for bad debts account, and you'll see now why. We start off with a provision for bad debts balance of 660. We calculated that the correct picture is actually 3102. That's what we calculated here. The correct picture, it should be 3102. It is currently 660. Okay, my debtors book is going to stay the same at 31020, and my new debtors value or trade debtors figure is going to be the debtors book minus the provision for bad debts. So that's going to be 31020 minus the 3102, which is 27 918 27918 100%. And then the last tricky part here is to calculate what my new expense figure is. So let's quickly see if we can do that. So the current expense is the bad debts that has been written off, which is 1980. We got that from here. Alright, there's my 1980. That's the current expense. Then we know we've got this additional adjustment, alright, which is going to be credited to provision for bad debts, but the debit leg is going to be on the provision for bad debts adjustment account. Alright, so we've got an additional expense on the provision for bad debt adjustment account. So current expense, which is the bad debts, plus my provision for bad debts. So it's also an estimate of the amounts that we're not going to get back from the customer. Provision for bad debt adjustment. So that's why it's an expense, because this is money that we're not going to get back. So in essence we're losing more money, which is 202,442. We got that from here. That's my adjustment. If you add these two figures together, you're going to get a total of 1980 plus 2442 4422 4422, and that is my new expense figure, which is the bad debts and the provision for bad debts adjustment. Right, so it's those two together. The bad debts, remember, is the one that is a bit more certain. The provision is an allowance or an estimate that we make of the guys that we're expecting won't be able to pay us. So we can fill this in here, 4422. To check if you've done this correctly, you can see if the total value of the asset and the expense before is equal to the total value of the asset and the expense afterwards. I'm not going to do that now. So the asset account should be decreased. The way we're going to decrease the asset with the provision for bad debts is by increasing the provision for bad debts account. So we're going to credit not the debtors control but the negative asset, which is the provision for bad debts, and we're going to debit my provision for bad debts adjustment, which is the expense which increased there, and we're done.